I was actually thinking of putting this chart up and saying nothing for the next 20 minutes because this says it all. But I thought, well, I'll give you a little more for your money and make it a little more interesting. And so, wow, look at that. Well. Silver in 2 years up 356%. Yeah, phenomenal. You know, it took 45 years to take out $50, and then it took 3 months to go to 100. Who would have thought? I didn't say anything. Yeah, so it took that long. You know, somebody asked me a little while ago how I knew silver was cheap at $20, and I said, well, that was easy. Nobody wanted to talk to me. Very different story today, and you know, based on the attendance in this room, really nice to see, and very happy to see people are interested, and for good reason. So let's move on. Let's talk about silver. I don't think that this is anywhere close to the end. This is a chart that goes back 50 years, and it's the ratio of silver to the S&P. And I don't know if you can tell, but I put a circle down here so that you can see that we had this little blip. Well, that's a long way off from that. And in 1980, the ratio was 0.3. Today, we're at 0.015. This ratio would have to go up 20 times to match the return of silver versus the S&P in 1980. So that's one, for me at least, one really big indicator that this is nowhere near over. I thought I was going to do something a little bit different this time. Rather than talk macro like most of the other newsletters, you can get lots of great information from listening to them. But I thought I'd look back a little bit on some of my the titles for some of my talks over the last couple of years. So 2 years ago, when silver was $23, I said silver is a critical metal and that it has explosive upside. A few months later, it was at $28, and I said, silver's breaking out. Are you positioned? I hope you were positioned, by the way. Then a year ago, it was $30, a little bit higher, and I said, the silver squeeze approaches. I still hope you were positioned. A few months later, I said, silver is still the world's cheapest asset. And then by September, it had really rallied, $46. And I said, well, okay, now silver is the new silver. Here we are, $103. So what's next? Hopefully I have the answer for you. So let's start with that. It's been a big year, as we all know, and a few big things have happened in the silver market. Just in the last week and a half, the U.S. Mint suspended silver coin sales. That's the American Eagle. They said they needed to reprice. When they repriced, prices were up 90%, essentially overnight. Last fall, the U.S. added silver to their critical minerals list, first time ever. Recently, they decided that they were going to plan a strategic mineral reserve, $2.5 billion reserve. Very recently, Trump told his trade officials that they should start exploring the idea of price floors for their 41 critical minerals. Interestingly, China controls 60 to 70% of the world's silver refining, and they've just decided to tighten their silver exports. Now, India allows silver as collateral for bank loans. And very recently, Widmer, who is an analyst with Bank of America, said his target for this year was big range, but anywhere from as much as $135 to $309. So here we go. Where does silver sit in terms of ownership and investable assets? So this is a chart that shows the world's investable assets, $261 trillion of assets. That yellow sliver there is gold, and that's just 6%. Silver doesn't even show up. I can only imagine silver is part of this very, very small sliver down here, which they call other. And the other is worth 2.5%, and that's all the rest. That's not just silver. So I can only imagine this silver is probably somewhere around, at most, 10% of what gold is. So we've got a long way to go. There has been a lot of movement. People are starting to get interested, which, based on the price, is not too surprising. But the chart on the left shows you world total holdings of silver in ETFs. And that has really started to move up. But in the West, we essentially have not participated the same way. The chart on the right is the SLV, and it has a long way to go to match its peak in early 2021 in terms of the number of silver ounces that were held. In fact, bullion dealers are telling me that they're actually buying more silver than they're selling. So what that means is, at these prices, people are bringing their silver to them to sell to them. And obviously, they must be offering some pretty reasonable discounts to those prices because they're having to load up on silver. But it's a smart move. This, I thought, was really interesting. This looks at, these are the numbers from the Silver Institute. And so every year, they come out with the World Silver Survey. This is in the month of April. And these are revisions that came out in November. So right here, you have what they expect as the silver deficit for 2025. Those numbers will come out this coming April. Originally, that number was 117 million ounces. And they said, oh no, silver demand went down overall, believe it or not. And it's going to be more like 95 million ounces. Interestingly, if you include the amount of silver that flows into silver ETFs, which they show on a separate line, not in the whole chart, that number is 200 million. When they put out that number in April, it was actually 70 million. And I said, that's way too low. We're looking at least double that, 140, 150 million ounces. And when they revised it in November, they said it's going to be 200 million ounces. So guess what? You look at the overall balance, when you actually include what flows into ETFs, we're looking at the largest deficit the market's ever had. That's a deficit of 30% of an entire year's silver supply. So where is this metal coming from? It's definitely scarce. And what we've seen in the last year and couple of months really has just been never really seen before, frankly. Late 24, early 25, we had this whole thing with this whole explosion of this concern and risk about tariffs. And so what happened? Tons of metal flowed from London to New York. And then the tariffs didn't happen. And then there was this tightness. The market started to realize that really, which I've been saying for the last couple of years, that inventories are being drawn down. Industrial suppliers need the metal. They don't need a futures contract. What they need is delivery on a futures contract. And London was very short last fall. And what happened? Whoops. China started delivering to London. And frankly, the way I see it, this is just a shell game. So you've got the three shells, COMEX, London, Shanghai, and you have the same amount of silver. It's under one of those shells. All they're doing is moving it around. You lift up the shell, well, guess whichever, you pick the market, it's in one of those. And another signal for market tightness, what's happened with lease rates. They've exploded, especially in 2025. Also, hardly ever seen these kinds of market stresses. This is a chart that I had actually put up a few times over the last couple of years. I thought this was interesting to revisit, essentially from Bank of America. And they looked at what kind of supply deficits we might face over the next few years. This goes up to 2030. And what they did was they looked at the major base metals plus platinum and silver. And silver, by far, was going to be the biggest deficit. I mean, look at that number. They've been talking about a deficit potentially in 2030 of 120%. That would mean that in 1 year, you're short by the entire year's supply. Where's that supposed to come from? I mean, it's just crazy. Hard to, and people are doubting that silver's going up, had been doubting that silver's going up. I think they're kind of waking up now. And yet it's still under-owned, and the speculators have not even come in yet. Looking at this is commitment of traders for speculators on the COMEX, and as you can see, we're below average. It was a little bit higher, but it's actually come down lately, so they're not that excited in the market, not yet. There's a lot of room for the gold-silver ratio to fall still. We're down now from 105 a little while ago to 50. That happened really fast, as you can imagine. And frankly, when these things come, they overcorrect. So I think that if you look at that rising line, 40 is pretty reasonable. I'm not saying it's happening tomorrow, but I think it's pretty reasonable. And frankly, it could easily overcorrect. And so we're essentially at $5,000 gold right now. If you look at a 40-to-1 ratio, gold to silver, you're looking at $125 silver. That doesn't sound so crazy right now. And if you look at potentially a 15-to-1 ratio, which I believe it's going to go back to, which it reached back in 1980 when silver was 50 and gold was 850, that would mean $333 silver. And I've been saying for a long time, and I said so in the book, that I think ultimately in a mania phase we could see $300 silver. I still believe that. I'm not saying it's going to go there and stay there, but I think it's certainly achievable, and we're a third of the way there now. That doesn't mean you shouldn't be cautious. Silver is volatile. I've been saying that for a long time. I don't think that surprises anyone. If you look at the 2001 to 2011 bull market in silver, there were 5 corrections of 14% or more. And if you take the average of those corrections, you're looking at just under 30%. So from $100 today, that would bring you to $70. So gold goes, I'm really happy that my talk is on the Saturday because gold can't drop today. but I'll take it, If it goes to 70, none of us should be shocked, and we should treat it as an opportunity. Frankly, that's at least my point of view. Silver does great things in bull markets, as we know. And if you look back to 1971, the last 50 years, there were several major bull markets in silver. And the current one, which is way over here, which has only been 3 months by my estimation, is only about a quarter of the way of the average, 400%. And the length of time, it's been almost 3 months. The average is 2 years and 3/4 or so. So I think we've got some way to go. Silver miners are supposed to leverage silver. That's the whole point, risk versus reward. And that hasn't been the case yet. I'm not saying silver stocks haven't done well, especially in the last year, couple of years, but they haven't offered the kind of leverage that they should. Pan American Silver versus silver in 2002 to 2008 doubled the price of silver. That's pretty good over 6 years. Wheat and precious metals between 2008 and 2011 offered a 1,500% return, while silver offered just under 300% return. That's pretty good leverage, and that's one of the bigger public silver companies. In 2016, we had a mini burst. Silver was up 40%. The SIL was up 240%. SILJ was up 300 and almost 50%. That's the kind of leverage that we should expect. Silver versus silver miners over the last 5 years. This is pathetic, actually, but an opportunity, I believe. So silver has doubled the return of silver miners over the last 5 years. That's negative leverage, frankly. If you look over the last 2 years, they're even. Silver miners have equaled the return of silver. Again, speaks to opportunity. And if you look at what's been happening in the ratio of SIL to silver over the last 10 years, so this first section here, that's the pop I was telling you about in 2016, when silver stocks exploded versus silver. that only lasted about 6 or 7 months. And frankly, it's been dropping. The leverage has been dropping. And this here is this year. So 2015, it looked like it was breaking out. And when silver reached, actually just before silver reached $50 in October, in September, the ratio peaked. And so what that meant was silver was taking off and the silver stocks were not keeping up with silver because that ratio crashed again. And here we are. I believe that's a double bottom and that over the next couple of years, we're going to see this thing take off like a rocket. Here's one of the reasons. Silver miners' profit margins are exploding. And the analysts, which is understandable to some extent, are way behind. So if you look at let's call it $20 all-in sustaining cost on silver. And that might sound low to some, but silver's a byproduct in 75% of its production. You've got gold, lead, zinc, copper, except for maybe lead. Most of the rest of those have gone up considerably. So if you're taking the price you get for those metals and you credit that against your cost to produce the silver, that's made your silver that much cheaper to produce. So at $90 silver, at $30 silver, you had a 33% profit margin. At $90 silver, you have a 78% profit margin. So what happens when the analysts start to catch up? Frankly, probably right now, they're still using $25 or $30 silver, and they have to look back a couple of quarters, take the averages, and so on. And we're at 100 today. You know, it reminds me of something that Eric Sprott said just this past year at PDAC. He said, the advantage that I have over most other investors is I don't use historical prices. I don't look back a year. I don't look back a few quarters and take an average. He said, I use spot prices. And that's the advantage of someone who has conviction, because you're looking forward. You believe not only are prices where are they sustainable where they are, but they're actually headed higher. And so he attributes a much higher value to projects and to production than just about everybody else. And he's been actually very much proven right. And that's the way I believe that we're in a sustainable market, not just for precious metals, but for commodities as a whole. I think that part of it is really just getting started. And I think that, if there's anyone to look to for success and for outlook, of course, his risk tolerance is a lot higher than most, but he's certainly been proven right. And so here's the opportunity. There's a guy by the name Ned Naylor Leland who runs the $3 billion Jupiter Asset Gold and Silver Fund. And he recently pointed out that silver producers are trading at 2 times net asset value, and yet the developers are at 0.2 times net asset value. So just that catch up is a 10x. We haven't even talked about juniors yet. So that's where I believe the next opportunity is silver miners. I think for the next 2 to 3 years, with some volatility, and it may not be in some ways quite as easy as what we've experienced over the last year especially, but I do believe that's where the opportunity lies. I'm here to help, do some research. Research Stocks still have the only silver-focused investment newsletter. We have about 28 positions in the letter. Over the last year, most of them are up at least 2 times. Many are up 5 times. We even have an 8-time return on one of them. Again, I believe it's still very early. There's lots of upside ahead. Partnered with Jeff Clark, part of a growing group. We've got 2 free newsletters. We've got 2 paid newsletters. We have a premium letter that gets you access to some private placements. I recently brought on a very sharp young guy who is a senior analyst, helps me out a lot, Ted Butler, working with me on Silver Advisor. We have a new marketing manager, Victoria Noble. Say hi, Victoria. We've got Jen, who helps us with admin. We've got Sharon Alexander. I don't know if you're in the room, Sharon. She's helping Jeff with, she's a geologist helping Jeff on doing some great stuff on Pay Dirt Prospector. And that's it. I mean, patience is the commodity. That I think you need to leave this with that in mind. And that's it for me.